All right, folks, we're back. Now, again, we've agreed that the basic premise is opening, the open, high, low, and close. The opening time is fixed. The closing time is fixed. Below, when you're bullish, below the opening price, you're expecting, of the candle you're trying to trade, right? You're expecting a range to form and then a change in the state of delivery, whether it's breaking a high, whether it's closing above a down close candle, whether it's an OTE, whatever, right? You're expecting below the opening price of the candle. So the opening time is there, opening price, expecting below the opening price, a range to form, CSD, and you rally. We can narrow things down even further by saying we wait for the first quarter right of the candle to finish, which is why we skip Monday, which is why we skip the first half an hour, which is why it's 9:30, not 9, which is why the Judas comes at 2, not at 0 GMT, right? Which is why we wait for week 2, not week 1, which is why we use week 3 as a continuation of the reversal that happened in week 2, right? So open the open, high, low, and close. The candle opens. The first quarter of 4 quarters, or 3, and I've mentioned the use of each before. You wait for this portion. You wait for a range, an accumulation to form. You wait for a manipulation in week 2 of the month. Manipulation. And then week 3 and week 4, you watch for a distribution. Me personally, I like to be done by week 3, right? So as I said before, I'm usually looking to play a 3 candle formation. If I'm waiting and planning a trade for a long time, then I will catch it from week 3, from week 2, and hold it to week 3, 4, 5, 6, 7, 8 to hold a long-term swing high or swing low, right? The confidence to hold is going to come from the IPDA data ranges, right? And I'm going to link each one of these videos to a picture, a sample size, an example picture in the chat, all right? But anyway, for the sake of this teaching, quote unquote, and I say that because I don't really see myself as above any of you, right? At the end, I'm a student of the markets, as are all of you, always learning, maybe a bit more advanced, you can say, but I don't see myself as better than anyone because of it, right? So I'm waiting for a candle to accumulate within this larger candle, right? Waiting for accumulation, manipulation, and distribution, right? If you miss this, then you can trade towards a certain drawn liquidity which you framed beforehand. after the manipulation, you can be looking for buys. If you ever heard someone on Twitter, right, whether it's ICT or someone else, some other credible sources on Twitter, which are very few, if you've heard them saying the term looking for sells, looking for buys, then 9 out of 10 times they don't know what the fuck they're talking about. However, this is what it means. We have manipulated, and we're clearly drawing towards a certain point, right? That is when we look for buys until that point. Where? At key levels. 50% below the opening price, order blocks, FVGs, breaker, whatever. But that only happens after the manipulation, during the distribution, right? So applying this on Bitcoin, what happened was precisely that. We had the open, the fixed value. We had accumulation, manipulation, looking for buys, distribution. I like to buy at the manipulation phase, as you know already, right? Open, key level, low, high, close, right? This is my entry. However, the whole point of this section of the teaching is that you're trusting the low formed during that certain time to hold, whether it's week 2, whether it's Tuesday, whether it's London. I've mentioned before that a good place to put your stop loss is Tuesday highs and lows. London highs, what the hell is this? Goddamn. Tuesday highs and lows, London highs and lows, week 2 highs and lows. And that brings us to the concept of the high of the candle until the middle of the candle, right? If you follow that, if you follow the idea that, you know what, I have caught the high of the candle, not this one, but because this one was a clear, strong, bullish bias, 232,000. If you can bear in mind, if you can have this framework in mind, which is I'm going to catch the high of the day till New York, I'm going to catch the high of the week till Thursday, till Wednesday even, right? I'm going to catch the low of the day until 9. If you play the game with that in mind, then you will find a lot more winning trades in your favor. Right? So instead of course, this is something I'm saying, you better be writing it, which is catching the low of day, high of day, whatever, until the 50% of the duration of the candle is reached, and then you take it off. What does that look like? A refresher. I've shown this before, but for the lazy ones who are a bit slow, right? You're catching this until this, and you're having enough because maybe you were mistaken by the positioning and you're actually in a bullish environment. Then what are you going to do? Then it's going to go and it's going to wreck you, right? Using your stop loss as a support level later on, right? At the 50% of the candle, of the time of the candle. So trying to catch a low of day, higher of day until half the candle, until the NY session, is a model by itself. So anyway, let's focus on let's finish up with the monthly candle power of 3, the open, high, low, and close. The model I was mentioning, which I've been mentioning for a while, is I'm taking a higher time frame candle and I'm looking for a range to form at the high or the low of the higher time frame candle. And I'm trading that range to the opposing end of the higher time frame candle itself, which is 1, 2, 3 candle formation. So this model I'm talking about right now, this is the higher time frame candle, right? This is the time for manipulation to occur. This was a beautiful classic, and classic only happens during classic buy candles. You got this, you got opening price. We're below it. We never bottomed out till the second section, second quarter of the candle, right? The manipulation phase, because there's always an opening range for the candle. Sometimes it's less, sometimes it's more, depending on the average range of the candles, or the amount of pips or points it is going into a Judas, right? Which you can measure using, for example, if you're trying to measure a Judas on a Thursday, then you can reference the Judas that happened on the Wednesday before it, and Tuesday and Monday. So accumulation, manipulation, distribution. You've heard me mention before a lot of times, I'm looking for a thick, heavy, high volume candle. Let's see what that is. This is a range. This is a timed range. This is week 1. This is candle number 1. Right? Week 1 of the month. We're going down. And we're looking at this thick, heavy, high volume candle. So the higher time frame candle is having a thick, heavy volume candle at the end of the range. And in that range, I'm looking for my range to form. When this turtle soup happens, because we know time and price are both fractal, when this happens, then bingo, I have my entry right here. Even using a blind entry, which I call, if you have the range right, you can use a 1 to 2, 1 to 3, right? Let's say you use a blind 1 to 3, assuming you're going to use this knowledge to trade, rather than just read price, which is what it's being distributed for. You're taking this 1 to 3, the range on the lower time frame, you're blending it with the range on the higher time frame. And this is how I get my best trades. It looks funny, of course, now, but those of you who know, I actually held this trade all the way up till here. For those who've been following on Twitter, it looks ridiculous, of course, but if you think about it, if you think about what I just told you, looking for a lower time frame range, not during the accumulation phase, the manipulation phase, looking for a lower time frame range beneath a higher time frame range, using the lower time frame range's risk for the higher time frame range's reward. All right? Of course, you know me, if you've been following me for a while, you know I make fun of these RR tools, right? But if there is a realistic way of doing it, it is this. Right? It is the way I'm doing it. It is what I do. It's probably what I will always do, right? Looking for a lower time frame range at a above or below a higher time frame range, keeping in mind order flow, narrative, context, and bias. So that is one. If you remember, to even to dig in deeper on this piece of price action, I had also just beautiful. If only Twitter hadn't removed, if only it hadn't removed the bragging function. The bragging function. I got one right over here. If you had noticed, I had also called a bottom, quote unquote, right over here. Now, why was that? Again, the same exact idea. You got this higher time frame candle. Candles are ranges. So if a candle is a range, I'm looking at the low of the higher time frame candle, which is a range, for a range to form at the low of the higher time frame candle. And that is precisely what I got. A lower time frame range, right over here, always the same, never looks any different. A lower time frame range with a lower time frame range's risk. Eyeing the previous higher time frame candle. Now this model, which is which I've been discussing for half an hour now, possibly more, which is 1, 2, 3 higher time frame candle, and not just any candles, right? Open, accumulation, manipulation, distribution. Open, low, high, and close. Open, high, low, and close. Looking for cells in this one, which also has within it an open, high, low, and close. A good practice to have, whether this is, and this is where things will serve you well if you take this information through a hefty backtesting session, whether this is week 2, whether this is Tuesday, whether it's 2 a.m., whether it's 3 a.m., right? whether it's 9:30, whatever, whether it's the 9 o'clock candle, whatever this is, the whole idea is to take this higher time frame candle at this specific time, accumulation, manipulation, distribution. A good practice to keep in mind is to target the 50% of the candle, TP1, and the opposing end of the candle as a TP2, right? I've mentioned two models in this specific recording. You can take one single sentence of what I'm saying, or a few minutes to be fair, and make it your own model, right? I have many of you who are doing that, who are taking some of my words, some of my logic, and using it as your model. That is precisely what you need to do. Right? Don't get lost in all this. If it seems too much, then don't feel lost. Simply choose one which you resonate with and make it yours. Those will win. Specialists always have more value than general practitioners. All right? So whether it's a 3 candle, week 2, Tuesday, true day open, right? True session open, which I will talk about in a few in the next few recordings. The idea of a true session open, it's been mentioned a couple of times on Twitter, even by ICT himself. I will be shedding some more light on that topic when it comes to the daily candle. But for now, this is all within, by the way, we're still in the monthly candles power of 3, right? And as a side dish, you've been served 2 models, which is the higher time frame, looking for a lower time frame range above a higher time frame candle during the specific time, week 2, Tuesday, etc. Or simply taking a 3 candle formation, right? Taking 3 candles first to the 50%. And this will give you a ton of trades, by the way, or to the opposing end of the candle. Let's go to the month. You got the accumulation, manipulation, and distribution. Every single buy when you're bullish should be below the opening price of the candle you are trying to anticipate. So I was expecting a bullish candle on the monthly. So every single potential entry is going to be below the opening price, right? It all goes back to, all this noise aside, it goes back to the basic idea, which is the opening price. We fall below it. We create a range below the opening price. We ride it back to the opening price, potentially flipping the opening price breaker, quote unquote, and rallying higher. Candle 1, candle 2, and candle 3 of the same higher time frame candle we are trying to predict, right? So that's a monthly, PO3, right? Week 1, week 2, and week 3. Week 4 is probably going to be a chop fest, which we avoid. So we stick to week 1, 2, and 3. Except if we're expecting a ranging higher time frame candle, then what do you do? What happens when you have a ranging monthly candle, for example, where it's going up and down and up and down? Then you can expect a range to form, which will have week 1, accumulation, week 2, manipulation, week 3, distribution, but not exceeding the opposing end. It's not accelerating towards the opposing end of the expansion. Now, how do you put that in a visible picture form? It goes like this. And it always leads back to the same higher candle premise, right? The higher time frame candle premise, which is week 1. We had a range on the 4 hour, for example. Ranging. Week 2 was also ranging. And then it hit week 1's candle in week 2, leaving below equal lows. Do you see how much more sense that makes than simply equal lows and false break? Nope. It's going above the opening price, right? Leaving equal lows in week 1, taking week 1's high during week 2, the time designated for manipulation, and then distributing either during week 2 or we look for sells in week 3 to the equal lows within the context. And this is not just some fancy talk. This is literally price being called and will be called live as long as I am on Twitter. All right? This one right here, same logic. This one here, sticking to the bias. Remember, you go back, how to frame a bias. Take this away. Entry, stop loss, target. A side note, it might seem like a lot at the beginning, right? Like, what the hell is all of this? But once you take one of these pieces of information, you make it your own, you apply it by yourself in your own charts, then you won't even need my opinion anymore, right? You'll just need the information you took from here, which you made your own, which you chose out of all the 2-3 hours, whatever, even 6 hours in the previous one. If you can take one piece of information and make it yours, you have succeeded, all right? Now we move on to the weekly candle.